The numbers are really strong across the board. Bottom line, top line forecast. What are you seeing out there right now?
Well, it's definitely a reflection of our Power of Three ×2 growth plan being in full swing. And as I've said before, we really are early innings of our growth. And I think this quarter and the first half of 2022 is a reflection of a business that's implementing innovation across the three pillars of product, guest experience, and across our different regions around the world, and experiencing very balanced growth across activities, across categories, across gender, across digital, in stores, driving traffic, guest acquisition, and both within North America and internationally. So it's exciting to see the momentum continue in the business, driven by both our core and our approach to innovation.
We've heard some commentary from some of the other retailers lately, Calvin, about the consumer, and especially the high-end consumer, potentially starting to trade down or look for better deals. Are you seeing anything like that?
We are monitoring our guest behavior very closely, and looking for any signs that would indicate a change in behavior. And as to date, we have not. We grew our men's business 27%. We grew our women's business 24% in the quarter. Our traffic increased 30% in stores, over 40% online. New guest acquisition was up 24%. Transactions with existing guests up 17%. Positive comp growth in stores at 18%, online 32%, and across the region. So we're not seeing that, and it's driven by full price innovation. Our markdowns are at pre-pandemic levels of 2019, so we are not a promotional business. We won't be. We are selling through innovation full price, monitoring our guest behavior, but seeing very encouraging results and fueling the business across multiple levers of growth potential as we look forward to the back half of this year and into 23.
You did not mention the belt bag yet, but I have to think that was part of the story this quarter.
Well, it's always fun to have a product that is both engaging with guests socially as well as with our core. But as I shared, bulk of our business is being driven through growth of men's and women's, 27%, 24%, in our core. Our accessories business was up 80%, but it's a smaller portion of our sales. It's exciting to see. It's definitely helping the new guest acquisition numbers, but it's exciting to see. But the bulk of the growth is coming through our core product.
What are you seeing so far in this current quarter, back to school and then into the holiday season?
Yeah, we're going to continue to monitor, as I said, the behavior of our guests. We're going to provide guidance on the earnings call, and we are very confident and comfortable with the start of the quarter, and we have very exciting back half of innovation of product coming, and we're cycling over some opportunities from last year, where, if you recall, last year it was September. It's hard to believe it was only a year ago. Where we saw shutdowns in Vietnam, disrupted a lot of our flow of inventory, in particular certain categories like our outerwear. So we're excited to have that behind us. We're excited with our innovation pipeline and the momentum we carry into the quarter and into the back half. But we'll keep monitoring. As we know, there are others that aren't seeing the same, and there's a lot of macro conditions that are happening, and we'll keep monitoring.
So the supply chain issues are behind you. What does that mean for inventories?
Getting better from where we were last year. At the peak, on ocean deliveries were over 95 days. Typically, it's 45 days. We're in the 70-day range. So we are still leaning into air freight, which is putting some pressure on gross margin, but we're able to balance that a little bit more. Our vendors have done a great job in catching up to orders, which will help and improve our on time and as we manage our inventory going forward. So it's improving, but it's definitely not at the pre-pandemic levels. And we expect that through the back half of this year and into 23, it's going to be improving, but a continual balance getting back to the pre-pandemic numbers.
You said that you're not a promotional business and it's not something that you're having to do, but the industry is moving more in that direction as supply comes back, as the consumer trades down. Even in your category, we've seen some evidence, haven't we, Calvin, that promotions are back. You're an outlier?
Promotions are back. Others in the category took price action. As we've stated, we took very modest price activity this year, less than 10% of our SKUs. We've implemented most of those. We haven't seen a reaction from our guests, and we continue to drive our business through innovation. But we were cautious on changing prices. And as the industry were more aggressive, they're now course correcting a lot of that activity through promotional. And I just think we took a different approach. Our brand positioning is different, and we drive through innovation. So we'll keep monitoring it. But we've operated through a promotional activity in the past. And although it might have been less through the last few years, we have had heavy promotional periods that we've operated through, and the brand, the resilience of the innovation and the product positioning continues to be a unique offering in the category, and we'll continue to operate that way.
What about the international picture, Calvin? How is that looking right now, as I know that's a key part of the growth strategy?
And it's super exciting. Our international business in the quarter was up 35%. Every region we're in, we're seeing solid double-digit growth contributing. China, we saw improvements in the quarter again from Q1. Even in Q1 with closures and shutdowns as a result of COVID, we grew our business. We grew at 30% in quarter two, 70% on a 3-year CAGR basis. Continuing to invest, very excited about our long-term opportunity in China. And we have a few stores closed now, and the team's doing a wonderful job operating through some difficult times, but very glad and proud to see how the brand continues to resonate with our local guests there. But overall, all international markets are doing incredibly well.
You also opened 21 new stores, and I'm curious what the trajectory is for new store openings and how much you think that's going to impact growth, and whether Wall Street understands that part of the story.
Yeah, Wall Street's full of a lot of smart people, and they hopefully understand the early innings and the balance drivers of growth that we have. And stores remain an exciting element of our future growth story. We now have over 600 stores globally at the end of this quarter, and we're continuing to invest. We're going to open 75 doors this year, 25 in North America, 50 globally. We continue to invest and expand stores that are proven and adding square footage, and our productivity numbers are above the pre-pandemic levels of 2019. So stores remain such a big part of this brand, connection to the community, the role that educators play, and we're seeing that across every market. And even in North America, our most mature, we have an exciting, still long runway of growth for stores. So it's a big part of our strategy, obviously driven by e-com, which is now 42% of our overall business and grew 32% in the quarter. So excited to see the balance of store and digital through that omni lens that we've been investing in for the last few years.
And traffic has held up in the stores, it looks like.
Over 30% traffic growth in the quarter, over 40% online. So absolutely, we are seeing good numbers in the role that stores play in our ecosystem in relationship with our guests.
Calvin McDonald, thank you so much for taking the time ahead of the call.
Thank you.